All right, welcome back. We are talking about bubbles today. So, bubbles or asset pricing bubbles, speculative bubbles. Let's define this here real quick. A bubble or a price bubble, occurs when the price of an asset increases significantly above its fundamental value or what it's actually worth. So this can happen in many types of assets. It can happen in stocks, real estate, commodities, cryptocurrencies, collectibles. So this particular video, we're going to talk about what the anatomy or the stages of a bubble are. And then we're going to talk about some examples in order to see if maybe we can identify some that have happened in the past or some that are happening right now or in the future. And so this is an interesting one because sometimes if it does have a fundamental value, for instance, a stock, we can come up with a fundamental value and be able to quantitatively show, hey, this is underpriced or now or way overpriced. This is getting way out of hand. And I have the fundamental price to prove it. Same thing with real estate. When there's some fundamental ways that you can price real estate based off of different cash flow factors. And so we can have a fairly good idea of how much it's overpriced. But what about ones or assets that don't have a fundamental price? This is particularly interesting, but also a bit tricky because sometimes the intrinsic value, something what it's actually worth, is hard to define. And so this is where we can get into some significant troubles if things get out of hand. But the whole point of teaching you this is to be aware of it so you don't participate, because a lot of people who participate in these bubbles on the back end lose a lot of money in this case. And so I'm going to show you here an example of the stages here. So I'm going to go ahead and share with you my screen. And I'll pull up the chart of stages of a bubble. That's also in your notes as well. And you see this general pattern in all of the different bubbles. It doesn't always fit perfectly, but there are some general trends that we find here. You find here, smart money joins into whatever the asset is or whatever the collectible is. And suddenly there's a small buildup. It's getting a little bit more. But by the time we start hitting this exponential growth or this parabolic growth, this is where we start seeing the mania phase, or it's getting a lot of media attention. There's one red flag. Then we start seeing a lot of enthusiasm. And I want you to note, especially if you're going to be in finance, you will start to notice people who never talk about money or financial related topics are coming to you with this topic, and they're interested in wanting to know what we think about this. This is the enthusiasm part. And then once we get to this greedy part, here's where I'm going to introduce a term called the greater fool theory. And this is where nobody really cares about fundamental price anymore. It's had a run up. And if I buy something at $50,000, I don't really care what the price is because all I want to do is sell at 50 or 60. So I might be foolish by buying at $50,000, but if I can sell it to a greater fool at 60 or 70, then I'm not so dumb after all. So anyway, this is that point where you see, all right, this is going up really quickly. People are trying to flip this in a very quick manner, and it's a lot of greed. And then it finally hits this point where we're in this new paradigm. Doesn't matter about price. It can only go up. When you hear that, this price can only go up. This is your final red flag that we are about to reach the end. And so that is, if you're at a party, you want to stay at a party for as long as you can without getting in trouble. When you start hearing new paradigm, that's when the cops have been called, and it's only a matter of time before they're ready to bust up your party. So that if you're smart, You identify that, you can leave the party before getting in trouble. And then usually what we see here is sometimes there's a little bull trap where it's down and then hits a little air pocket. But usually at the end, it's going to end in a very steep sell-off. Everyone's reaching for the exit at the same time, and the door is too small, so it just really reaches a capitulation and fear. And what's interesting about this is once this ends, it'll actually go below because so much fear is baked in. It goes below the fundamental value of whatever asset we're talking about. And then that's where we have a lot of pain. And then eventually it'll go back to what the actual price is going to be. So if you see here, this works perfectly. Anybody interested in tulips, you can see here the price of a tulip in 1634. So bubbles are nothing new here. You can see it following this general pattern. Except for the bull trap, you don't see much going on here. It was a very quick capitulation all the way down, and it ended up well below where it actually started, even in its early phases. And that was what a tulip was in the Netherlands in the 1600s. That was a price. At its peak, a price of a tulip was worth 2 houses at its very peak. So just to give you an idea of what pricing can do, and there was this initial thought that it had healing powers and there were different colors that came out. But once we started getting into some leverage trades and it started only going up in price, that's where it went. And so people lost a lot of money who bought in at the top. One tulip for 2 houses worth of money. And now we look at this all these years later and go, yeah, it's a tulip. And so what's the actual value of a tulip? It looks pretty. There's no healing powers. It's a tulip. And so we think about it now, but in the moment, nobody's really thinking about that. That's why we're having this conversation today. And to say that this is over with is foolish because I can still see this even today. We had the old real estate market in 2007, 2008, and that sold off very quickly and went well below the median price. We had, anybody heard of Beanie Babies? There was a bubble there back in the 1990s where you could buy it for $5 at your local grocery store and then sell it online for a lot. And everyone thought it could only go up in price. More recently, has anybody heard of NFTs? Non-fungible, what are those? Non-fungible, what are those? What does that sound? I just know them as NFT. It's these digital pictures that you would own the rights for. And that went crazy back right after the pandemic here in 2021. And really what it is, it's a picture, but people were paying really high money because they thought they have rights to this picture. So again, you can see bubbles forming in different areas. And even with some of these cryptocurrencies, we'll see what happens over time about what Bitcoin is. My personal thought is cryptocurrencies are here to stay. But that Bitcoin is the one that's the one true currency. I'm not convinced of that. So therefore I have no money invested in that. So anyway, just my 2 cents. You can do what you want. All I would ask for you, if you're a big believer in that, is to diversify and not put all your eggs in one basket. So anyway, bubbles, be aware of them. They're still happening, and don't get caught up in the emotions. That's usually where it starts drifting away from fundamentals. It's a lot of speculative, demand-driven behavior from people. So with that, I will leave you and wish you a great day and see you on the next video.